Learned from the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in at January 28, 2021, and the stock market broke today. Today was absolutely insane, and it has more to do than just with what we saw with GameStop, but we got a statement from the president as well as the SEC after hours, so this is just a very, very unique situation, but what we saw today, even down to the earnings and the reactions, was absolutely nuts. It was a very wild and wicked day. We were even up as much as like $30,000, $40,000 on some of these trades. It was just going absolutely insane. So one, be very, very careful, and we're going to talk about that, but what you saw today was very historic in some senses of the word, and then what we see from the rest of this week is going to be very important, so I hope you're ready, but I have a lot to go over. I want to go over all of the plays that we made today. We took a lot of profits. We opened up some new positions, and then I want to also look at the rest of this week in earnings, as well as what happened in the market today and what we're looking at for the last 2 days. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the-stock-market. You can post the plays, see the plays, watch the watch list come to life, and yes, if you believe in religious freedom, we love you and we support you, and we think that's awesome, but we do not want to be a part of your holy war on GameStop, okay? And the most important thing you need to do, post your watch list below. Let us know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to Chad, baby. So right off the bat, like I said, today was very unusual, but it was also very dangerous. The key moving forward, especially these next few days, I'm really going to be having my eyes peeled here, because how we close this week and what we see with the market depth, the difference between pretty much the overall market. But if you see market participants pile in one area and then not pile in another, that can say a lot. But this next few days is very, very important. I talked about this a lot today on stream. The events that we saw with this giant short squeeze, it is affecting every stock, not just GameStop. So I know the idea of liquidating hedge funds and all that sounds cool, but how margin calls work, usually people have money in the account or the requirements will change. So what that leads to is a lot of people selling off winners to cover other positions, unless they just flat out give up and take the loss. But considering the situation, it's going to be very, very interesting, because a lot of people know deep down in their heart, GameStop is not worth $300 a share. So this is just creating a very wild scenario, but the key to be looking at is market depth, and then if we see any sort of spillover from any of these activities. But essentially, if you see this major short squeeze even continue tomorrow or through Friday, that could be more further signs towards that dislocation. And this is what I'm saying, this gets very, very wild, and if you guys are new and you don't know how to invest, be very, very careful. We could go over strategies, we could talk about a lot of stuff, but at the end of the day, just make sure you know what you're buying, and don't be so quick to listen to other people saying buy this, buy that, and all of that. Even people on YouTube, wait, that's me. But I'm actually being serious. I'm not a financial professional. I'm not a financial advisor, nothing of that nature, and a lot of people aren't. And there is really distinct rules as far as recommending stocks and telling people this and that. So I encourage you to do your investments, but don't really get caught up in or lost in the sauce with anything. But that being said, now this is something that we talked about a lot, and then even after hours, this is showing you the gravity and scope of what we saw today. And this is why I'm even saying the market really was broken, because this was not a typical earnings move, and this was our first red day since the Biden administration. And now, you know, it was almost 700 points, the biggest down day since October. So this was large by any measure, and then even what you're looking at after hours, it is still coming down here. So this is where I'm saying the GameStop situation and what's going on with this giant short squeeze, it is starting to affect everything, you know, especially with such a big earnings day we had today. This was very, very unusual. So now you got to hear from the president, the SEC, a Michigan senator, and then even Powell. They've all commented on the situation. You know, Powell was asked about it. I kept saying this the last few days on the watch list. I've clarified it, but that was actually the first question they asked. And then even Stephen Leisman, he tried to reiterate it, but Powell took a very, very hard stance saying no comment, as it is simply not his job. I could cut you the rates, but anything else? All jokes aside, though, that is actually very important because Powell pretty much said he's more concerned with unemployment, and that's what we saw today. We also got Powell today, but surprisingly, more of the move happened before Powell. It just picked up after Powell. But with his comments, I even interpret it as a green light, more or less, but he's not saying anything about it. He said he's not worried about inflation and prices going up, and a lot of people are saying, oh, this is bad. We're worried about the hedge funds. We're worried about this, but the Federal Reserve chair literally said today, in essence, and this is at least my interpretation, that if people lost more jobs and unemployment would actually be more disastrous than any sort of stock market bubble or stock market inflation, hedge fund, anything of that. And it seems like he's saying, well, if you need my help, I'll be there if the market drops or if it does turn to anything negative. Otherwise, till then, he said he is focusing on employment and the recovery. So that was just very interesting overall. But the SEC, Biden, all of them, what they've came to the conclusion is that they are going to be closely monitoring the situation and investigating it and seeing what they could do about it. But even Powell's comments, and even I stand by this too, I mean, if this keeps going and this does get any worse or this leads to anything else, it smells like legislation or some sort of regulation is right around the corner. Again, people are talking banning certain stocks from being traded. You even saw restrictions on some brokerages today. So it's a very, very interesting and volatile situation on all fronts. Nonetheless, though, we can't forget about earnings, so I would keep watching the earnings follow-ups. Again, we had Apple after hours today. They killed it, but the stock is actually going down after hours. You also had Facebook as well and Tesla. It's been looking like a lot of the earnings lately where you've been getting a mix of kind of beats and misses on some fronts and then some interesting guidance. But watch what happens and how any of these moves can affect the market coming into tomorrow. But at the same time, now most of these companies have been moving in line with the expectations that the options have been pricing. So I'm kind of even thinking, it's going to be following these earnings run-ups or these earnings continuations, but there's definitely a bigger focus on a lot of these stocks in the short squeeze and what's going on in the market right now. So watch that. And then finally, ladies and gentlemen, if I could say anything, this is fun. This is what we've done. We stream, we're trading. We've done this for a very, very long time. I've been in the market for a while. I love Chamath and what he said on CNBC. I think it's really awesome to see this. Congratulations to every single person who's made money out there, and I'm glad to see some people get their due credit. But at the end of the day, I'm not talking to you if you did good, and even if you did, I hope you do. But all in all, everybody be very, very safe out there. I'm not telling you to do this. I'm not telling you to not do that. I'm just reminding you to be safe because simply you have seen me do this a lot. You've seen me talk about these plays. Our whole strategy is about time in the market and not timing the market. Put yourself in a position to succeed or quote unquote get lucky, but don't chase the dragon. Don't put more than 20% of your account on a position. Again, none of this is a recommendation. Option trading is extremely risky. You can't lose almost their financial investment, lose all financial educational purpose, only thing of a day. But seriously, control all of this. Don't get this FOMO demon making you do all this stuff. But a lot of these plays that hit, we've had our hand in the cookie jar and I haven't had to take any extreme risk. You guys are watching me manage several hundreds of thousands of dollars through these accounts, but I'm putting in small amounts. We're keeping it small and we're really forgetting about them and waiting. A lot of stuff blossomed from that. So treat this like investing. There will be short-term opportunities. There will be time to speculate. You guys hit them, do what you need to do, but just don't forget to be safe and please do not contribute to pumping and telling people buy this, buy that. You could call it whatever you want, but that is just not really okay and it has real consequences. So be very, very careful with that and be safe. So enough being your stock market dad. Our work is cut out for us. We have opportunity, so I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I have 3 different plays. Again, you've probably heard or seen a lot of these plays, but I also want to talk about the strategy and highlight why I did what I did, but also how you could play it. So the first play that I made this morning was Nokia. And again, I did make other plays. We're going to go over those. I took a lot of profits, and that's one thing I will say here too. If you woke up to a bag, don't be afraid to take a little profits and turn it into a long term. But as far as that Nokia play goes, I'll show you the play, but I did a debit spread. So this is where you buy one option and then short another option. And you even heard this explanation on CNBC when there was with Chamath and everything. I think it was Pete Najarian explained how he did this on GameStop puts. So the idea here is the options are great. They offer defined risks, or that's what he said. Again, I still think you should be careful. It's dangerous out there. But when the options go crazy, especially in these environments with some of these stocks, what happens? all of the options inflate and it becomes very difficult to price. So you could have bought a naked call on Nokia, but they were very expensive for a little bit amount of time. So what was the idea here? I wanted to be able to play Nokia, but I didn't want to spend too much and I still wanted to have upside. So the debit spread allowed me to play the option for less than $12 a contract, but that came at a cost of limiting my upside. So as far as the play, you can see it right here. I did this right in the morning, about an hour or two in. I grabbed 100 of these, anywhere between 7 cents and 12 cents. The option chain was very, very volatile. It was hard to get filled on. And you can see the play here. We only closed up $250, and that's because it kept getting halted. And even the Nasdaq came out and they said they're monitoring social media activity on stock. And if they see a lot of social media activity mixed with weird option or stock trading activity, they're going to halt the stock. And that led to the stock dropping. But at one point, this was holding around $2,000 gain. We were even up on it as much as $16,000, and that shouldn't make sense because this is a capped gain trade. But given the situation with the option trade, anything could happen because there's still time. But what we did with this play, we grabbed the next week Nokia calls. I grabbed 100 of the $8 calls for $23,000, and that's not really how much I spent, but that's how much it would have cost if you wanted 100 contracts at this price. But then I shorted and sold 100 of the $9 calls and got back $21,000. So my total cost on the play was about $1,400, or that's the net liquidity. It was about $1,200. And now I have the right to get Nokia at $8, but then I sold it to somebody else. I said, I'll sell it to you at $9. So pretty much your max gain is $100 per contract, the difference between 8 and 9. So off of 100 contracts, that's about like $10,000. So we spent $1,200. Our max profit potential is about $9,000 total. So that was the first play. Again, I started seeing all this, and just today was so crazy. And I got a lot of most of the plays I made today because I called this FOMO 21, like COVID-19. The FOMO is spreading. You're seeing it everywhere. Everyone keeps talking about it. My idea was throw some small amounts. We already played on it from last Friday. We had a lot of gains. So now I'm just parlaying it, keeping it small. And then at any moment I can, I'm making things free or trying to make them cheaper. So that was the first play. And now as far as the second play, this one gets a little weird because I actually bought a penny stock. I don't know if it's OTC or Nasdaq, but I grabbed NAKD at 97 cents today. And again, this is just all on my logic where I'm saying, hey, I'm going to throw a small amount of money. Again, I threw in about $1,900 and I plan to swing trade this, but it already shot up after hours. I will possibly look to make this free and sell back and get my initial invested tomorrow, but I am tempted to hold a little bit longer given the current environment because like I'm saying, whatever happens in these next 2-3 days, this could tell us a lot. But the idea of this play was everything's kept going crazy. I want exposure to it. And even coming back here to what I said on it, I cannot confirm this because it's more sketchy of a company, but I'm pretty sure the last reported float was around like 40 or 50 million shares, and then it has a 25% short interest. So the problem is when you get into some of these sketchy penny stocks or anything like that, they could run up a lot, but it's ran by, random people. But it says that they have 577 employees, which is kind of good, but the risk is that they could always add shares and depreciate it, and well, that's just not good. So I plan on swing trading this and holding it, but this was just getting into the wave and hype because again, every single big name and even earnings trade was down today, and all of these stocks that were heavily shorted all went up, and we had a lot of those. So I saw an opportunity to get a cheap swing trade, hold it, and that's going to be my plan. Please do not pump it. Do not say I did this or that because I'm just buying this like I bought every random play that I have, and I probably would have put a lot more money if I knew that was going to happen. But at the same time, this is what I reminded you guys, this is what we did with AMC. I put in $1,400, but I adopted this same strategy in the middle of all the volatility in August 7th. Again, we could use this with many other examples. We document all of this, and again, as Chamath would say, transparency. I let you guys know what I'm going to do and how I play it out. We did the same thing, look at holding another small position. These small little swings, we did it with Palantir again. We bought it at IPO, we sold out, get our initial investment back. That is what we do, and that is my plan on all of these trades. So I think that play is going to be fun. It gives me a little bit of exposure, and I got to trim some other stuff. And then finally, I made a play on Walgreens, and I still like it. This was a quick 500% this morning. It was going crazy because they had a good rotation, and as the market was selling off, they were reacting to the news and everything. They started to shoot up, and it was very, very good. But as far as that play, I'm going to see if I'll grab some, but again, I have enough exposure already. I bought in the morning 20 of the weeklies. Again, all the premiums were expensive. I got those at 10 cents, and then I also grabbed some of the February 1960 calls. I only grabbed 2 of them for 51 cents. But in the morning, as because the stock was running up, and this is what I'm saying here. You could see this run up here in the morning. I'll turn off after hours. It was really, really shooting up, and this was when the market was really, really coming down. So it was looking good. There was a lot of eyes on it, but we bought those for 10, and those contracts went crazy. They went up to like 40, 50 cents. So I was able to sell half of them for 40, $50. Again, I just bought them at 10 cents, got my initial investment back, and I'm holding the rest, and then those other two. But like I said, I still like that play, so I'm going to be watching it tomorrow. But those are going to be the first 3 plays I'm watching. As far as everything else, we made a lot of different moves. First, we had that earnings for Starbucks. Remember, I said that was going to be my favorite options trade. I told you it met the criteria, and sure enough, it worked playing both ways. Not only were we able to sell out yesterday and get some of those free contracts on the upside, we made our contract free on the upside, but now those 2 puts that we bought the other day, we got those February 96 puts for 44 cents. They shot up today. The stock dropped. I sold one at 173, so about $40 into almost 200. And then our Facebook puts, I explained this one yesterday too, kind of going after the logic of the earnings run down instead of earnings run up, but those shot up in the morning, so I took the profits pretty quickly, but I only sold half and made it free, so we got a free Facebook earnings play, and we'll see how the rest of those play out. And then now to the other account, again, we made a lot of different moves today. I already woke up to the AMC. We got those blackberries. It was looking good. Today was a solid day, but I was like, you know what? There is always going to be risk on the table, and again, this stuff is dangerous. I didn't want to even get caught up in the moment, so what can you always do is always safe and responsible. You sell and get your initial investment back, or at least that is what I do, and that's exactly what I did on the berries. You know, it was a lot of stress handling the berries. I don't think I was meant to be a berry farmer, you know what I'm saying? But we got to walk away with 100 shares of blackberry. I sold 400 of the 500. We bought them at 19, got like $2 a share or something. So I had about $1,000 in profit. 100 shares is worth 2,000. So I got half of my initial investment back, but we have got to drastically trim the position. I got to free up a lot of capital for potential plays we could find here, but we will still be good to go. So that was the second play. And then also more breaking news right now. As I'm making this, Discord has banned the Wall Street Bet server. Wow. The day just gets more interesting. But as far as the other plays, I did this often too, but I was like, all right, let me take some positions because I still had those leaps, but I closed out of that big commerce. So we made this play last Friday. Remember, I bought those 20. I sold back on Monday, got my initial $2,000 back. I got another $2,400. I sold out all of them between $330 and $370. So that big commerce April play is now closed out. But why did I keep it? Because remember, we had these old leaps. Those came back to life and it was a big position, but it's also a lot closer to the money. You know, they're only $25 away, whereas these would have been another like $75 or $100 away. So got to take profits there. And then finally, we did a live lesson. A lot of people had AMC. A lot of people, you had gains, and we want to say just be safe with them. So I went over the Ghetto spread to highlight this, where you could still kind of be in a position, turn it into a debit spread. Again, you could watch our video. It's called How I Turned $500 into $40,000. And I explained the Ghetto spread because we did that with the trade where we made a lot of money. We wanted to give us some upside, but then we wanted to also protect ourselves and make sure we got paid, because remember, options expire worthless, most of them at least. So I decided to Ghetto spread those 160 calls. So if you guys remember, I also made this one free the other day. We had those 160 calls. I had 5 of them and I spent $233. I was able to short the 175 for just under that. Pretty much got the initial investment back, but now there's a $15 difference. Got my money back. So now we have no more risk on the table with Apple. And then it left a $15 difference per share, is about $7,500 max profit on the upside. So those are the only other plays. Again, I'm still holding the AMCs and everything else. Again, got to trim a little bit, got to add some new ones. So it's going to be very, very exciting. But as far as everything else tomorrow, again, watch Apple. A very, very interesting move. Again, there was a lot of upside priced in and it had that big earnings run up, but I also want to see how it will affect the rest of the market tomorrow. So watch them. Facebook, I think, will be a little bit more murkier. Again, we'll see. I think it's just going to depend on the market. So watch for these pre-earnings moves. Same thing with Tesla. I am going to keep watching the Starbucks, because if this breaks below that 96 point, we will be in the money, and then this could be pretty interesting from here. And it's going to be a Thursday, Friday, so some of these smaller movers might be good. Like we said, watch Walgreens, Naked, AMC. I'm still holding. As far as even other stocks, I mean, here, just be cautious. I'm holding the Palantir. I am pretty much going to be watching all of these momentum shorted stocks because they're making crazy moves. Even I&O, some of these are just really, really random, but they all popped compared to some of the big dogs, or at least the companies with earnings. So I had those old leaps, if you guys remember. So those came back to life. They were up like 10%, but we were down a lot on those. So it was very surprising to see those, but still holding those. Watch DraftKings. I like it. It hit above 56 today and came down. I think they're waiting for earnings, so that's kind of the thing that sucks. But if this catches any of that short squeeze steam, it is going to be wild. But I'm still holding those leaps. They came up today. Again, big commerce I want to see. And again, big commerce above 100, it just starts to get crazy. If you guys remember from IPO, once you start getting into this range, it has gone off and really went wild. So I just wanted to trim the position, but I'm still in that one. And we still have those shares in the long term. And then Dropbox, I was really surprised by this. It dropped a little bit after hours. It was trading weird. And again, we even saw this the first time we traded the Dropbox, but I think this one's very interesting. I flipped the coin on it. It told me not to do it, but I wanted to make it free because these leaps went up and they went up a decent amount. You could have got $1,500 of free leaps. So I'm still in this position. And remember, this is a big one. So hopefully that works out, but I will be monitoring that coming into tomorrow in the next few days. So watch them, watch BlackBerry, and then even UVXY. And I'm actually going to stick it here. There's your naked crazy after hours move. But if you look at the UVXY, despite kind of the move you've seen here with the market, I mean, wow, I guess it does look pretty big on the daily now when I look at it, but we have not seen this much volume on the UVXY in a while, and this is key. But now coming to the final ones, yeah, TLT did its thing. It looks like TLT is going up, but that is not the key. Again, you're talking short squeezes. You're talking people getting blown up, all of this stuff. This has to do with liquidity, the margin crisis. Watch the dollar. If this thing skyrockets, that is a clear red flag, and that is really going to be the key that I'm watching. Nothing else matters to me right now because depending on how this plays out, this could tell us a lot. The question is, though, will it be the chicken or the egg first? Again, that's going to even relate into the bonds, but our work is really, really cut out for us. You got to stay focused. You got to stay safe, stay ready, and keep it small, baby. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to ask, baby, is this your battle? And get ready. But the Cole loves you. I love you. I'm going to see you in the morning. Let's go.